Okay, so let's begin straight away. What are trading sessions? On a typical day of trading, Monday to Friday, we have 3 trading sessions. In order, they start from the Asian session, then the London session, and then finally the New York session. From these diagrams below, we can clearly see the opening and closing times of these key sessions. At this point, you can pause the video and take a quick look at the sessions and their timings. Once you are done, just go ahead and click the play button. So why are they so important? Just before we continue, make sure to subscribe, give this video a like, and follow me on my socials. All of the links are in the description below. Okay, so back to the video. So why are they so important? They are hugely important because they give us a massive clue as to when volume will increase within the markets. This gives us an idea of when we can expect larger moves to happen. As traders, it is obvious that we want to be part of the whole move or take what we can from it. Essentially, we want to be the remora fish that swims with the shark. Of the 3 sessions, the 2 main sessions that have the most volume and biggest moves tend to be the London session and the New York session. These sessions have specific times within them known as kill zones. Within these kill zones, it has been noted that the big moves tend to happen. For the London session, this is 7 AM to 9 AM UK time, and for the New York session, this is also 7 AM to 9 AM New York time. So now we naturally come on to entering and exiting trades. From above, the best piece of advice is to enter trades while sessions are running or during the kill zone timings, and to exit trades just before or when a session closes. Ideally, you can hold a trade for the longest part from London kill zone to around 4 to 5 PM UK time, because after that, the volume generally dies down. Session characteristics. For this part of the video, again, like the section before, I will be focusing on the London session and the New York session. So beginning with the London session, it generally creates the low of the day in an uptrend and a high of the day in a downtrend. It has the highest order volume of any session, which means it can be extremely volatile and can have moves that are harder to decipher. This is why many people complain it is the hardest session to trade. The London session generally starts off an intraday to swing move. Please make note of this as we will refer to it during the NY session. Moving on to the New York session. Referring to what I said in the London session, the New York session does one of 2 things. It either reverses the move from London, and so causing a reverse in the daily candle, or it continues the move from London. This is very important when determining where price can go. Since it is the last session of the day, we can understand that 2/3 of the daily candle has already printed, meaning we have more information on the trading day to make an informed trading decision. In order to visualize the sessions, it is important that every trader has FXN Asian session range as one of the indicators on their charts. Thank me later or thank me now by subscribing or giving this video a cheeky like. So now that we have digested all of that information, let's look at some super quick examples and one trade example using what we have learnt today. As we can see in this example, price is in a range during the Asian session and then moves up and gives us a nice push during the London session over here. Next, we see during the New York session, price retraces just before, and then as soon as New York session opens, we get a nice push to the upside. This is a good example of price continuing London's move during the New York session. And so it's a good example of a continuation during the New York session. Example 2, reversal. In this example, we can see that the Asian session is moving sideways again. And then during the London session, just at the beginning, we get some volatility and then we push to the upside. And we know that the New York session is either going to continue this move to the upside or it's going to reverse. And in this case, it shows us a nice reversal. We can see price pushes up, comes into this area, and then it reverses to the downside. This is a nice example of a New York session reversal. Example 3, a trade example. So in this example, we will start off at the Asian session. So Asian session is about to close, and let's just play price action. And we're going to focus on the New York session. So as we can see, price starts pushing up and it looks like it's taken this liquidity to the left during that London kill zone timing, and then it pushes down. So now we've taken liquidity to the left, we've broken some structure here. So we do have an understanding that we're moving to the downside. If I zoom in a little bit more, we can see that this move here was more impulsive. This is quite corrective. So, you know, if you're trading London at this point, there should be an idea in your head that we can move to the downside. As we can see, price pushes away and impulses very nicely. At this point here, what I'm going to do is I'm just going to pause and I'm going to start to mark out what I see. So the first thing I see is we have imbalance to the left over here, and very large imbalances because this is a very impulsive move. And the order block that caused the impulsive move, I'm going to highlight this as well because this to me right now is very important. Okay, so this is an area that we could possibly sell from during the New York session if this opportunity is given to us during the New York session. So let's monitor price. So as we can see, we push up, we pull down a bit, and then the New York session started. So the New York session has started at this point over here, and we can clearly see we have a high here that if price wants to come into our area of interest or point of interest, then we would count this as now liquidity and an imbalance that can be filled. So let's see what happens. price pulls up, it's taken this high. A lot of people take this as a breaker structure, but because we know there is a supply area just above it with an imbalance, that this is more likely to be liquidity, and so the breaker structure shouldn't really count. And then if I just start to slowly go into it, we've tapped into this area. Now let's take a short from here. Let's put the stops just above. Let's just go like there, and let's aim for, let's say, a 1 to 5. So there we go, and let's see what price does. As we can see, price moves away, quite choppy. We do go into a bit of drawdown over here, but that's fine. So we're still moving down. It's quite a slow movement, not as impulsive as I'd like, to be fair. And at this point here, just because I'm the type of trader where I don't really want to be in a trade around 5 o'clock UK time, I would actually take positions of here, go break even, etc, etc, just to protect myself, because I know that when there's less volume, price essentially is not really going to deliver me what I want. But let's see what happens in this case. Let's move this to the right a bit. As we can see, we get taken out for 1 to 5, which is a nice trade. So as you can see, we've built our confidences around the New York session either giving us a reversal or a continuation. And as we can see, we get a nice continuation of this London move down over here. Obviously, price will retrace, and that is expected because we need a retracement for price to continue. Sessions play a vital part of our trading day, so it's very important that we understand these sessions and make use of them. If you have made it to the end, thanks for watching. Make sure to subscribe, give this video a like, and I'll see you in the next video.